Hey gang, I got something good for you today. I want to show you some market internals. Now, why are market internals important? Why are they different than charts? There's a lot of questions, and I'm going to get a little fancy here. I'm going to get a little technical, but I'm going to try to make it as simple as possible. So when you're looking at price patterns, when you're looking at price data, you're looking at a market from a single dimension. Not only that, keep something in mind. US stock indices are capitalized weighted. What does that mean? That means the bigger stock in the index gets more attention, gets more power, gets more control. So in other words, if you have 500 stocks in the S&P 500 and Amazon, Google, Yahoo, Microsoft, and Nvidia, stocks with the big capitalization, Apple, if they're moving higher while smaller stocks are moving lower, the market will still go higher. The problem with that is bigger stocks move higher faster, but ultimately the overall market controls movement. So a lot of times when you're looking at price action, you see a slight distortion. Now, when you're looking at market internals, you see less of that distortion because it's not capitalized weighted. That's number one. Number two, market internals give us a very different view of the market. Now, what we're going to look at today is a put to call ratio. This is an indicator that's a contrary indicator. It works contrary to the market. What do I mean by that? If it's bullish, that means the market's about to turn bearish. And if it's bearish, the market's going to turn bullish. Let me take you to my, let's screen share for a minute and I'll show you what I'm talking about. It's just easier when you're looking at it, all right? So here we go. Now, this is a chart of the CBOE, Chicago Board of Options Exchange, total put to call ratio. Now notice I used the word total. You can get this put to call ratio for the top 500 stocks, the S&P 500. You can get it for the Dow stocks, but this is the entire stock market because I want to have a broad representation of the stock market. And what this tells me is, it tells me when traders are pouring their money into puts or pouring their money into calls. It tells me the number of open put contracts divided by the open call contracts. So that's all a bunch of talk. Let me get practical here. So for example, when the number, remember this, write this down, this is really important. When you see the number at 115 or higher, that means there's panic in the market. Traders are buying put. That rubber band is getting stretched out. There's a lot of put buying, all right? And when the market goes to 0.80 or lower, that means there's tons and tons of call buyers. Greed is flowing everywhere, all right? So again, 115 or higher, extreme put buying. 80 or lower, extreme call buying. Now here's the thing, and this is very important. Don't make anything more out of this indicator because it's very valuable and it works really well when you have that stretched out rubber band, okay? Either to the call side or the put side. Majority of the time, it's doing very little. It's around 105, 95, 90. That's noise. That means nothing. The only time this indicator is really valuable is when it's above 115 or below 0.80. Again, 1.15 means market is scared. And usually when the market gets really scared, what does it do? That rubber band snaps back and it turns around. And what happens when the market's at 0.80, 0.80? It means that the greed is everywhere. Markets are making 52-week highs. Fed is telling us that economy is stable. Everything is looking great. That's when Trump is telling us that the economy is just unbeatable and there's absolutely very little negative volatility in the market. That's 0.80. And again, whenever you have these extremes, you tend to see the market turn around, all right? So while I'm here, let me show you the SPY, the S&P 500 right now. As you can see here, let me make this a little bit bigger. Right now, the S&P 500 is above the 200-day moving average, but below the 50-day moving average. And I call that the twilight zone. but it looked like we bottomed out and it looks like we're heading higher. And that, taken into account with the rubber band approach that I showed you, tells me that the stock market's going to head a little bit more higher and hit the 50-day moving average. Now, will it continue moving higher? I don't know. Here's the thing. That put to call ratio that I showed you, that little indicator that I showed you right here, once it gets to 1, once it goes from 117 or 135 to 1, market's neutral. That snapback occurred. So it's really only effective for a few days. It's a swing trading indicator, all right? So again, what is it that you need to know here? Put to call ratio, it covers the entire market. We're looking at, let me highlight this for you here. We're looking at the total put to call ratio. And again, you want to see it above 115. Notice what happens every time it's above 115. It heads lower. The market heads lower. And again, what happens? Let me go ahead and delete this. I'm having too much fun with this pen. What happens when it's at 0.80? The market turns higher. See, every time. And this is a weekly chart. This is going back, I believe this is a weekly chart, not sure. No, this is a daily chart. But this is going back all the way to 2018. And let me show you something else here before I let you go. If you look at the weekly chart, this will go back quite a bit, but I want to show you something. These candlesticks are for the birds. Let me go to a solid line. There we go. Let me show you how accurate this is. This is the weekly chart, folks. Look at what happens when it goes to 115 on a weekly basis. It comes down. And look at what happens when it hits 80. It comes down. It could go a little lower, but it comes down. And same here. It could go a little higher, but typically once you see that spike to the 115, the market bounces back. It's a rubber band. 115 or higher means the market's going to revert higher. 0.80 or lower means the market's going to revert lower. I'll talk to you guys later. You have a great day, and I hope you enjoyed this video. If you guys really like this stuff, subscribe to our channel and like our videos. Talk soon. Roger Scott here.